Dollar CAD technical analysis November 17th, FXEmpire.com. The dollar CAD had a wild day during the Wednesday session as various factors continue to push and pull at it. Oil markets broke above the 90 level in the light sweet crude market, and the $100 level in the light sweet crude market, and as a result, it did drive demand for the Canadian dollar. However, later in the session, we had issues with Italian bonds spiking well above 7.25% on the session Tuesday and Wednesday, just because of ECB buying, not actual people stepping in to buy the Italian 10-year bonds. It managed to fall down to about 7.1%, which of course is better. But the fact that the central bank had to go in shows exactly how bad this contagion problem could become. So of course it creates a run to the dollar for the safety trade. Adding to that was in the U.S. afternoon session the report that Fitch was looking into possibly downgrading some American banks because of exposure to EU debt and EU banks. So, with all of that being said, it negated the gains that the Canadian dollar got, even in a strong oil market, and as such, we had pretty much a nowhere day. As you can see, we're stuck in a range, although we did kind of pop out of at least the meat of it during the session on Wednesday. But 103 is the top of that area. If we can close above 103 on the daily chart, this pair should rise and continue to push towards the top, which would be about 106.50. The parity level should be supportive and down to the 99 level. As you can see, has been a little bit supportive, and this of course is a resistive area. So we're still within the consolidation phase, and if we were to play this, we would play it more along the lines of a scalp, less along the lines of an actual trade, probably settling for a few dozen pips here and there and just letting it go until we can close above the 103 or below the 99.